Hello everyone, and welcome to today's presentation of 4 techniques for trading in a bull market. Now, I'd like you to take just a brief moment to view this chart of the industrial average, and today I'm going to be sharing with you a tool that as far back as this point right here, you could have known that the industrials were headed for a very nice sustained rally. And I'll show you what that proprietary tool is today. Welcome once again. My name is Steven Primo. I am the president and founder of Specialist Trading. And as you can see, we are an educational company. We're all about educating you so that you can ultimately put the power back in your hands and make your own trading decisions. It's our belief that the reason why most traders fail, it's been estimated upwards of 85%, is because you're giving your power away. You're relying on someone or something to tell you what to do. And so at Specialist Trading, we provide you with the tools, the insights, and the wisdom, as well as the trading strategies for you to make your own decisions and power your own trading. Now, I've been trading for nearly 40 years. I started my trading career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of them I was a specialist. And now, if you're not familiar with what a specialist does, they simply made markets. So if you wanted to purchase or sell a particular equity, you had to go to the trader who specialized in that, who made the market in that. I traded through the crash of 1987 and the bull market that followed, so I've been in just about every market environment. I've traded just about every technique or method you can imagine, so I know after my experience what works in terms of consistency and what doesn't. So at Specialist Trading, I teamed up with ProTrader Strategies, and all we do is we teach and mentor our students and members the things that have shown a certain amounts of consistency over the years. These are things that I continue to use in my own trading today. Now today, as I said, I'm going to be sharing with you 4 great techniques for trading in a bull market. But before we begin, we are required to show you this, so please take a moment to view it. This is our disclaimer. I'm going to show you a lot of performance results using these 4 techniques that you can start applying right away. But please remember that we can in no way guarantee that any of the results that I'm going to be sharing with you will be repeated in the future. So as you're taking a brief moment to view our required disclaimer, I would also like to invite each and every one of you to follow us on Twitter. All right, there's our handle right there at SPCLSTTRADG. You may want to copy that down. I post free information on a daily basis, anywhere from daily financial wisdom to actual signals that our strategies have generated. Although the way and the format in which Twitter has been set up is rather limited, so if you'd like to get more detailed information, such as educational videos and more write-ups about what we do at Specialist Trading and ProTrader Strategies, you can go to the Facebook page that ProTrader Strategies has put together. As I stated, there are a lot more educational videos, information about what we do and how we teach, so I would suggest going there as well. Now, one last thing, I'd like to make an announcement. I know it's rather late notice. We've been talking about this for the past month, but in case anyone has joined us or you're still on the fence, I really want to take this time to invite each and every one of you for next week, if you're going to be in that area or if you live around there, to visit me at the CBOE and Option Pit Professional Trader Summit. I will be speaking next week in Chicago, July 20th, 21st, and a special VIP session on Friday the 22nd. So we will be there. Would love to see you. As you can see, that is the link at the very bottom. It's not a live link, so you'd have to copy and paste that onto your browser to get more information or contact ProTrader Strategies. In fact, I believe ProTrader Strategies has some discount tickets still left. So if you're thinking about it, you've been on the fence, or if you just saw this for the first time and you really would love to get together with me, where we can have a drink or just share some time talking over the markets and different questions you may have, would love to see you once again at the Professional Trader Summit in Chicago. It's going to be held at the Chicago Board of Options Exchange. It'll be great. You can get a tour there, and it'll be July 20th and 21st, as well as a VIP session on Friday, July the 22nd. All right, so with that said, why don't we begin? Remember, as I stated in the opening statements, we are simply an educational company. As you see here, my goal is not like so many other websites you go to where I tell you what the perfect stock, currency pair, or future is to trade, or I tell you the perfect time frame, or I give you the perfect system. That's not my goal, and that's not what we want to be doing here. Our goal is simply to teach you how to trade with the specialist edge. This is the same edge that was taught to me nearly 4 years ago, and or I should say 40 years ago, and this is the same edge that I teach to all of my students and members. Okay, so we're an educational company. We want to put the power back in your hands so that you will ultimately make your own trading decision. Now, one thing before we begin, since this is going to be held as a class, I would like each and every one of you to ask as many questions as possible, but please wait till the very end. I have a lot of slides and a lot of great information to share with you, so I would love to take your questions, but please wait till the end. That way we won't slow down the presentation at all, okay? All right, so why don't we begin? And also, I'll just answer one question because that's probably the most common one. And is this being recorded? Yes, it is. We record all of our presentations, so if you have to leave early or if you're having technical difficulty, go to Pro Trader Strategies and they will send you a link to this presentation, all right? Okay, so why don't we begin? And let's start out with sharing with you 4 techniques for trading in a bull market, regardless of what market you trade, regardless of what time frame. And we're going to take these 4 techniques step by step so that you fully understand how to implement them in your own trading. All right, here are the techniques we're going to be talking about. The first technique is always plot the 50-period simple moving average. I don't care if you trade 5-minute bars. I don't care if you trade monthly bars. You should always have a 50-period moving average plotted. Let's look at this example here in STZ. Now, someone looking at this would say, well, Steve, boy, it went straight up and then it went straight down. There's really no trend here. So I'm going to wait till the news comes out, the earnings, or I'm going to wait till that guy in the chat room tells me what to do. All right, that's the way most traders trade, and that's how they make their decisions, by having someone or something tell them what to do. At specialist trading, we don't believe in that. Remember, once again, we want to put the power back in your hands. So how do you know what side of the market to be on? You add the 50-period moving average. And once you add the 50-period moving average, you ask yourself, where is price, or the majority of price, in relation to that 50-period? Now, if price is above, well, then the overall trend is up. That's it. That's simple. So if the overall trend is up, you're only going to be a buyer. You will never trade opposite of the overall trend. Okay? It's that simple, and trust me, over time, you'll see that you will increase your odds for consistency by applying this one technique. Now, let's look at this older chart of Apple here. Someone looking at this would say, well, Steve, you know what? I trade a lot of support and resistance, and it looks like we're making a real nice support right here, so I'm going to be a buyer of Apple. It's come down way too much. In fact, all the indicators that I track are tremendously oversold. We've been oversold for the last 2 weeks. And the guy in the trading room I follow, he says to buy Apple. All right. Once again, 99.9% of all traders trade this way, by looking at an indicator or someone telling them what to do. The first thing you want to do is to plot the 50-period moving average. And then you ask yourself, where is price in relation to that? Price is below. So if price is below, the overall trend is down. Do you want to be buying if the overall trend is down? Absolutely not. We don't want to do that. If the overall trend is down, we're only going to be a seller. Now, it doesn't matter what strategy or technique you use, but if you just apply the 50-period moving average, you will increase your odds for consistency. Okay, so that's technique number 1. Technique number 2, if you are buying, in other words, if price is above the 50-period moving average, look for a bar that closes in its top 25%, all right, the top quarter of its range. So as we're looking at this chart in STZ, once again, we find this bar here that closes in its top 25%. This is our edge. This is our signal coming from the market that it wants to go higher now. If you notice, all of these bars, when we were closing lower, most of them closed at the very bottom of their range, either in the bottom half or not. This one was close to it, but never really closed in the top quarter. All of them closed at the bottom, this one in the middle, this one in the lower bottom, and this one closed towards its top. So that's the market. Not some guy in a chat room, not some guy on TV, but the market telling you most likely we're going to go back higher. So that's our buy setup. Now, according to one of the strategies that we have, one of our most consistent strategies, it's a strategy number 4, buy setup. This is telling us to go long. Now, that's for buys. What if we are below the 50-period moving average? Well, then we want to sell, but the particular bar must close in the bottom 25%, okay? Just the opposite side of the coin. So as we see here in Apple, once again, we see here a lot of these bars close at the very bottom. And as you can see, once they close at the bottom, we kept going lower, all right? But we haven't got a setup yet using the rules of our strategy. But this bar closed in its bottom 25%, and our strategy, which is strategy number 4, generated a sell signal. Now, I can't give you all the rules to strategy number 4 because it's a really highly consistent strategy. It's one of our most consistent strategies we have. And we already have members in the course who paid good money to purchase it. But I'm giving you roughly about 3 of the rules already with these techniques. All right, so you know which side of the market to be on with the 50-period moving average. If you're above, you're going to look for bars that close in the top 25%. If you are below, you're going to look for bars that close in the bottom 25%, okay? Now, lastly, we are going to confirm the setups with the PET D. So what is that? Well, oftentimes you've heard me speak about the PET D, but a lot of people don't know what it is. The PET D is not a system nor a strategy, all right? So we'll start out with what it's not. It's not a system or a strategy. This is where most of our traders have difficulty with it because they think that, well, it generates buy and sell signals. It does not. It's a unique color bar tool based on momentum that is designed to show you in advance when a trend has most likely begun. So it's a great trend identifier. So as we see here in this older example of HRB, this is the way most people look for a trend. They'll say, well, you know, we've gone up quite a bit. I'm not really sure yet. Sure, we've gone up. It looks like we're rolling over. But once we break out above these old highs, make a higher high. I've always been taught that higher highs and higher lows constitute a trend. So once we started making higher highs, okay, that's the trend. Now we were in a full-fledged uptrend. So I'm going to buy now. And I'll look for some type of pullback. So we pulled back. And this is where I'm looking to buy, okay? And then inevitably, this is usually what happens, okay? Does that look familiar to anyone? What we want to do is know that we're in an uptrend at some point early within the stage of the uptrend, and we want to know that we're in a downtrend early before we start to fall out of bed. So now let's apply the PET D color tool. Remember, it's either going to be green or red. If we are green, we're in an uptrend. If we are red, the bars are red, we're in a downtrend. So we knew well back here that we were going mostly likely higher, all right? And we knew well here, well in advance of the sell-off, that most likely we were going lower. So this is the beauty of this color bar tool. It's the Primo early trend detector, okay? This was something I was introduced to nearly 40 years ago on the floor of the exchange, but it was simply a formula we knew. It was something we knew as the formula, actually, that we had to calculate by hand. But now that we've been able to formulate it into a color bar algorithm with high-speed computers and programmers, we've simply renamed it the Primo Early Trend Detector. Now, as you look here, this is the example I gave you at the beginning of the presentation. How would we have known that the industrial average was going higher at this point early in the stage of the rally? Well, we applied the PET D, and we see here that we have roughly 6 bars that are already turning green. So that's enough bars to tell us that we're in an uptrend. So we already know we don't want to be selling. The short-term trend is up. Most likely the overall trend is up. So now we've got 2 time frames telling us overall and short-term telling us that we're in a full-fledged uptrend. Well before most people knew this, and then look what happened. The industrial average rose 2,000 points in the next 2 months. So you see what a great tool this is, what a beautiful edge this is to have in your favor. So how do we trade with the PET D? We're going to use it as a confirmation tool. So, okay, if your strategy, whatever it is, generates a buy signal, the bar that generates that buy signal must be colored green by the PET D. This is your confirmation that it's okay to take that trade. So let's look back at our old friend STZ once again. Let's say that we wanted to buy, okay? Once again, we're above the 50-period moving average. We find a bar that closed in its top 25%. So let's say we wanted to buy now. We think it's going to go back up. Well, before we do that, we want to confirm it, because if the bar is colored red, we can't take that trade because the short-term trend identifier, the PET D, is not confirming it. So let's add the PET D. And as we can see here, the majority of bars are green. We have 3 bars red, but now on the setup, this bar is green, so it's okay to take this trade. You simply buy, and look what happened. The stock gained 8 points in the next 2 weeks. Why? Because we used all these techniques, plus we confirmed it with the PET D. Now, if you're going to be going short, whatever strategy you're using, whatever method you're using, it doesn't matter if it's one of mine or one of yours, if your strategy generates a sell signal, the PET D must color it red. So whatever it's based off, if it's based off news, if it's based off of a particular indicator you're following, or if it's based off the full moon, it absolutely makes no difference. But whenever day or bar it generates a sell signal, it must be colored red. So as we see here in this chart of Apple, once again, we are below the 50-period moving average. Now, our particular strategy, which is strategy number 4, generated a sell signal. Let's see if it was confirmed by the Pat D. Well, yes, it was, okay? In fact, all of the bars have been red. So we have the overall trend and the short-term trend both in downward mode. So this is a great confirmation to go short. And as you can see, the stock fell 13 points in the next month. So this is how you can become consistent, because we call this our dynamic duo. We're adding strategy number 4 along with the PET D. I've just given you 3 of the rules of strategy number 4, and we've shown you how to use the PET D with it. Let's show you some more dynamic duo examples in this bull market. Let's start out with BCR. Okay, now looking at this coming into July, this was just a few weeks ago, someone looking at this would say, well, Steve, I'm not trading this because we're going sideways. And the website I go to on a daily basis says there's no trend. You know, I follow the list of stocks that they recommend, and this is not one of them because it's going sideways. Okay, so there's basically no trend, and I've been taught not to trade in a sideways market. That's how you get whipsawed. Okay. All right. Once again, where are you taking your cue from? Where are you taking your suggestions for trading? You're taking from an outside source. Take your cue from the market. In other words, the stock we're trading. So what is BCR telling us? Well, we have to add the 50-period moving average. It's telling us the overall trend is up. So it's not in a sideways mode or going nowhere. It's in an overall uptrend. So that is, first of all, we know we're not even going to think about shorting it. We're only going to be a buyer of BCR. Now, if we look here, strategy number 4 generated a buy signal. We have the setup bar right here. We closed in the top 25% of its range, and it met all the other rules, the remaining 2 rules of the strategy. So our software generated a buy signal on the 28th of June, all right, just a few weeks ago. Now, this is good enough. There's a certain amount of consistency in what we've already taught you and shared with you today, but we still want to confirm it. If you have the PET D, you will add your odds for consistency even more. So we want to see if it's colored green. We simply add the PET D color bar tool, and yes, it is. The day it generated a buy signal, it colored the bar green, so we know we can take the signal, and the stock gained 11 points in the next 2 weeks. Now, someone looking at this using conventional wisdom, saying, oh no, I don't trade sideways market, would have missed this entire setup. So that's why, you know, conventional wisdom doesn't work. That's why listening to other people tell you what to trade or how to trade doesn't work. At specialist trading, we don't do that. We don't tell you how to trade. We don't tell you this is the perfect system. We give you all the tools and information so that you can make your own decisions. All right, let's look at ROP. This is an older chart here, a little bit more advanced, because most of the bars are actually below the 50-period moving average. But right here we have a bar that is entirely above, and it closes in its top 25% of its range, okay? So what is that telling us? Well, the strategy generated a buy signal because this is a valid setup. So on the 3rd of March, we generated a buy signal, but we want to confirm it because after all, the majority of the bars have been below the overall trend tool, the 50-period moving average. So let's add the PET D. And yes, it's green. So that's giving us the confidence to take the trade. And ROP gained 12 points in the next 3 weeks. All right, see how simple that is. We didn't have to listen to anybody or anything, didn't have to decipher any news. We just listened to the market. And if you missed that, don't worry. We're always generating more and more signals using these techniques I just shared with you today. As you see on the 24th, another buy setup was generated. We close in the top 25% of its range. We are above the 50-period moving average, and the PET D confirmed it. How about CCI? Well, this is back in May coming into this last week. Now, once again, someone could look at this and say, Steve, there's no trend. For the last 2 weeks, we've been going sideways, up and down. I'm afraid to do anything because we're going to get whipsawed. Well, where is price in relation to the 50-period moving average? Okay, price is above. So even just looking back 5 or 10 bars, that's all you need to know what the overall trend is. So if the overall trend is up, we're not going to sell anything. We're only going to be looking for buy setups. Now I'm showing you strategy number 4 along with the PET D today, but it could literally be any strategy you want or trade with. All right, so our strategy found out that there is a bar here that closed in its top 25%. It met all of the other rules of the particular strategy, so it automatically generated a buy signal on the 4th of May. But it's not enough just to take this trade. We want to have a little bit more assurance to take it because after all, we like to get as much, probability or odds in our favor. So we add the pet D. And as you can see, that bar was colored green. It does not matter if the bar before it is red. It wouldn't even matter if all the bars prior to it were red. All that matters is the day your strategy, whatever it is, generates a buy signal, it has to color that bar green. Now, if you're looking at 5-minute bars, that's fine. The minute your strategy generates a buy setup, that 5-minute bar must be colored green. Nothing changes just because we're looking at a different time frame. So, as we can see, the stock gained 15 points in 2 months. This is coming into the first week of July. And if you missed that setup, look at all the other buy setups that were generated along the way. This is the beauty of using these techniques because they have a high level of consistency that oftentimes, not guaranteed, but oftentimes they will give you several opportunities to get back in. All right, let's look at an older chart here of DUK. All right, now someone looking at this would say, well, Steve, we've had a really nice run up in this stock and it looks like it's rolling over. In fact, the chat room I go to says we should sell this because it's looking like it's going to roll over and come all the way back down. All right, we don't care about those things at specialist trading. The only thing we care about is where is price in relation to the 50-period moving average. That tells us what side of the fence we're on. All right, so we add the 50-period moving average. Even though it looks like it's topping out, we add the 50-period moving average. And price has been above for the last 2 or 3 weeks. So in actuality, we're not going to roll over until we have consistent closes below that 50-period moving average. So we're not going to bet on it to go lower. We're actually going to look for buy setups. And what do we have? We have price above the 50-period moving average, as well as a bar here that closes at the very top of its range. So that's a really nice buy setup. So a buy was generated on this particular day. If we add the pet D, we see that all of the bars have been green. Even when we were below the 50-period moving average, the bars were still green. So the overall trend didn't turn positive until right here. But prior to that, the short-term trend was already green, almost a full week prior to that. So now they're both in sync. We have high level of confidence that it's going to go higher. And the stock gained 8 points in the next month, okay? Now let's look at LinkedIn because oftentimes you're going to get scenarios like this. All right. Once again, someone looking at this would say, Steve, there's no way to trade this. We're looking at 2 or 3 weeks of data here and we're just going sideways. I have no idea what this stock is going to be doing. Well, that's because you haven't been taught the proper way in which to look at the markets. The first thing you do is you add the 50-period moving average. And as we look back here, we see the last 5 to 10 bars have been closing below the 50-period moving average. So that's telling us the overall trend is down. We're not going to be a buyer. Even though it appeared to be going sideways, we are not going to buy LinkedIn. All right. So we see here that a bar closed in the bottom 25% of its range. So that means our strategy number 4, according to the 2 remaining rules, generated a sell signal. So this has a high level of consistency for this stock to go lower. But how can we make sure that it's going to go lower? How can we be confident enough to take this trade? Well, you simply want to make sure that the pet D colors it red. So let's add the pet D. And once again, we can see now that all of the colors have been red. In fact, the pet D has been red the entire time. So we have the confidence to take this trade. And as you can see, the stock went down rather sharply right after that. Now the bars remained red, and we have different exit levels and different ways to stay in the trade as long as possible. If you really wanted to go for the long run, well, rather than looking at what most people say, support, resistance, you would just simply follow the pet D, and you can tell that the stock dropped 125 points in just 1 month. Now we knew as far back as here that the stock was going lower. There's no way anyone in the world could have told you it was going lower. And it's not as if the company, the CEO called me up and said, Steve, you may want to go short LinkedIn. Why don't you tell all of your students to sell it because in about a month from now, it's going to drop 125 points. No one told us. So someone would say, well, how did you know? Where did you get from your information? We got all our information from the market, from the chart in front of us. That's it. That's all we take our cue from. We don't have to go to a chat room or a trade room. We don't have to listen to news or trading gurus. We just listen to the market. So Another way and another advantage of using the dynamic duo is by keeping you out of trades, because some of the best trades are the ones you don't take. Here's a perfect example here in FSLR. All right. First thing we ask ourselves, where is price in relation to the 50-period moving average right there in green? Price is above, so the overall trend is up. That means we're going to be a buyer. We're looking for buy setups. It doesn't mean we're going to buy at the market. It just simply means that we know we're not going to be selling anything. We're only going to be looking to buy. All right, so we have to look for some buy structure. Well, we have the bar here that closed in the top 25% of its range, as you can see. So this is our setup. It meets all the other rules of strategy number 4. So our software generated a buy signal. Great. But we just want to confirm it. Let's confirm it with the PET D, because remember, in order for us to go long, we have to color that bar green. So once we add the PET D, guess what? It's green. It does not matter that the bar prior to it was red. All that matters is that the day you generate a buy setup, or the bar which the buy setup is generated on, must be in sync. So we colored it green, and the stock went up. Worked like a charm, right? Okay. Now, as the stock started to sell off again, guess what? Another buy signal was generated. So all we have to do is confirm it with the PET D. But what color is the PET D coloring that setup bar? Now it's red. So what is it telling us? The PET D is saying, even though this looks like the previous setup, we're right at the same level again, this is not a good trade to take. Don't take this trade. All right, so we bypass this, and some of the best trades are the ones you never take. So it's an added bonus by having the PET D, because it will keep you out of a lot of bad trades at times. Not guaranteed to keep you out of everything, because nothing does. But oftentimes it's a great, great filter. Now, one of the other bonuses of this is that you can add it to any different time frame. Let's look at intraday trading, all right? Here's a 1-minute chart of Apple. Now, looking at this, someone would say, boy, you know, I wish I could have taken advantage of this great run that Apple had on a 1-minute chart in the last hour. I would have loved to trade this. How would I have known it was going to go higher? Well, first of all, you would have known that you were in the overall uptrend and you wouldn't be selling because it was above the 50-period moving average. The same thing works on a 1-minute chart that works on a daily, weekly, or monthly chart. It's the same concept. Nothing changes. So we know that we're above the 50, so you would have been looking for buy setups regardless. Now right here at the very bottom, we had a buy signal generated. We closed in the top 25% of this 1-minute bar, and it was colored green. So these techniques work just as well for intraday trading. Here's a 15-minute bar of Facebook, okay? Now looking at this, one would say, boy, this is a 15-minute time frame, and Facebook really went lower. I wish I would have known. I got caught buying this thing, waiting for a bottom. Well, this is the way most traders trade. When something goes lower, they look to buy it, right? Because that's the way we've always been taught. Buy low, sell high. But it really is, you know, once again, there is no consistency in that way of trading. The real way to trade is to buy high, sell higher, and sell low, short low, and then cover lower. But someone looking at this would say, well, how would I know it was going to go lower? All you have to do is apply the 50-period moving average. And as far back, well back here, we knew that we should only be a seller of Facebook on a 15-minute time frame. So the same technique and the same rules apply for intraday trading. So as we look at this, we know we're sellers. As we see here, these were all sell signals generated using our strategy number 4 add-on. Okay, automatically adds on the sell signals. But we can confirm them with the PET D the same way if we were looking at a daily bar. All these need to be colored red. And as you can see now, every sell signal was colored red, giving you the assurance to go short on a 15-minute time frame. You can also use this for market timing. You can apply this to ETFs. You can also apply it to indices. Here's an older chart of the industrial average. As you see here, each and every one of these buy signals was generated by strategy number 4 and confirmed by the PET D. So this could have told you, just by looking at this, that, well, we have a buy signal generated. It's colored green. So this means the Dow is probably going to be going up the next couple of days, 300 to 500 points. And each one of these generated positive results. So you could have used this either to purchase a stock you're interested, maybe to purchase calls in another issue, or maybe even ETFs. But look what we have right here. We have another buy signal generated, but this one was colored red. So you could have taken advantage of the first 3 setups by using them as a market timing tool, but on this one, you would have had advanced notice that most likely the market's going to be going lower prior to anyone ever knowing this. So you wouldn't have taken that buy signal regardless of how you're going to trade it. And look what happened to the market. Now you know why we call it the Primo early trend detector. Because even though price was above the 50-period moving average and the overall trend was still up, the short term, the early trend was not confirming it. So that's why we didn't take that setup. Now, what about news? I know a lot of people are always saying, well, Steve, this looks great, but news supersedes everything. I mean, you can't stand in the way of news. News comes out of the blue often, and many times you're on the wrong side. Well, once again, I'm not going to say that these things work 100% of the time and they're golden, but we have shown many times, and I'm going to show you an example right now, how often the PET D, along with our strategy setups, are on the right side in advance of the news. So you even know prior to a news event coming out how to get into the stock or issue or future or currency pair prior to a news event coming out. Let's look at what happened just a week or so ago. Okay, Yahoo Finance reported that Hershey rejects a takeover, therefore the stock soared. Okay, the board for Hershey Company (HSY) is unanimously rejecting a $107 per share offer from the maker of Oreo cookies and Cadbury cream eggs, but that would have shaken the U.S. snack food industry. This sent HSY stock skyrocketing as much as 21% higher on the day, and shares closed at 16.8% higher in late afternoon trading. So what most people say is that, boy, this news came out of nowhere. I mean, I was caught off guard. There's no way I can take advantage of this, and there's no way that you can take advantage of that either. Once again, I'm not going to guarantee and promise you that we're always going to be able to take advantage of it, but let me just show you this example. Here's where the news came out in Hershey. Now, prior to this announcement, the stock was basically just kind of drifting sideways. But we have to ask ourselves, as far back as May, we crossed above the 50-period moving average. So we knew coming into June that you should never even be short Hershey. So at least you would not have been short the stock. And at least if you were thinking about buying it, you would have been known that you're on the right side. Okay. Now, as we apply the PET D, well, guess what? The majority of the PET D bars are all green. So this was telling you that not only is the overall trend up, but the short-term trend is up prior to the news announcement. And then lastly, do we have any bars here that close in the top 25% of their range? Yes, we do. We have a number of them. That's the market telling you it wanted to go higher. And according to the strategy number 4 rules, we had 3 buy setups generated prior to that. So if you had taken any of these signals, that's 20 points in roughly a week or so. Okay? So as you see here, sure, we're not going to guarantee you that this happens all the time, but here's a perfect example of what can happen prior to the news, because as I stated, the market often tells you in advance what it wants to do prior to a news event. So we don't listen to outside sources because they're usually a day late or a dollar short. What we listen to is the source. That's the chart in front of you, the market. So let's recap before we go into question and answers, okay? First of all, regardless of whatever strategy you trade, let's say you have a strategy, you say, well, Steve, my strategy is okay. I mean, it's not fantastic, but I like my strategy. It works pretty well. Okay. We feel if you plot the 50-period moving average and only buy when price is above and only take your sell signals of your strategy when price is below, we feel you'll enhance your strategy even more. You'll increase your odds for success. Now, likewise, if whatever strategy or technique you're using, if price is above, we want you to look for a bar that closes in the top 25%. That's a much better setup prior to entry, because that's giving you a clue that the market wants to go higher. And the clue is coming from the market. It's not coming from somebody or some indicator. It's coming from the market. The market's telling you that most likely I'm going higher. Now, conversely, if you are below the 50-period moving average and your strategy gives you a sell signal, wait for a bar to close in the bottom 25%, because that's the edge telling you that the train is most likely getting ready to leave the station and to go lower. That's a great edge to have that comes from the market. Okay? And then lastly, we feel you will really increase your odds for success by confirming all of your trades, regardless of what strategy, with the PET D. As I just showed you in a lot of markets in different time frames, okay, it's not just enough to have a strategy that generates buy and sell signals. You need to confirm them. And the best tool I know of confirming them is something I've been trading for nearly 40 years. That's the PET D. I use it every day. In fact, I used it this morning prior to this presentation. I confirmed a sell in the E-mini futures, which I was trading, and I went short once the bar turned red. So I use all of these things that I teach, I use myself. We were below the 50-period moving average. It closed in the bottom 25% of its range, and the bar turned red, and I sold, and I made a nice, I believe, 4 points in roughly about 20 minutes. So ask yourself, do you think these edges could have helped your stock trading this past year? Even if you just use the 50-period moving average, do you think that could have helped your trading at all? Well, here's what we'd like to offer you today. Our Dynamic Duo Attendee Special. This is our 2 courses, our 2 really high consistency courses. That's strategy number 4, along with the PET D tool. As I just said earlier, this constitutes our Dynamic Duo. You get instant course access, detailed instruction, many videos. I teach you all the entries, all the exits, and all the stops. We have numerous and various variables in which to enter, which to exit, which to stop, and then you can decide which ones you want to use. Because remember, it's all about you making your own decisions, not us. You also get the PET D. This comes with both add-ons. In other words, the automatic buy and sell indications telling you when the strategy has generated a buy or sell signal, and it comes with the PET D, coloring the bars automatically green or red. Now, as an extra bonus, in our 2-for-1 attendee special, you're also getting the ability to use this for different markets, because there's nothing you have to change. In other words, a lot of traders say, well, Steve, I do trade stocks every once in a while, but I like to trade, futures, and sometimes I trade them more than stock. Okay, let's look at how this example here in the 10-minute chart of the E-mini. We're going to use the same things I taught you today. We're above the 50-period moving average. Both of these bars closed in the top 25%, and strategy number 4 generated buy signals using both of these. Now, they have a high level of consistency, but if you want to really increase your odds, you want to make sure that they're colored green by the PET D. So let's add the PET D. We can see here that all of the bars are green coming into that day. So all we have to do is take the assurance of knowing that we're on line with the both courses. And the stock, or I should say the E-mini, went up 40 points in the next 2 days. That's $2,000 per contract. And as we stated earlier, there's always different chances and more chances to get in if you're in a nice sustained trend. We can also apply this to the Forex markets, okay? So if you like to trade currency pairs, here's a weekly chart of the Canadian dollar. A buy signal was generated last November on a weekly basis. Same rules apply. Nothing changes because we're changing the markets or we're trading a different time frame. We're above the 50-period moving average. We have a bar here that closed in the top 25%, and it's colored green. So what more could we ask for? We have total confirmation of this trade. We have the confidence to take it, and the Canadian dollar went up 800 pips in the next 3 months. That's roughly about $8,000 per contract. As an extra bonus, we provide you for a limited time with email alerts. But remember, these are not just to give you blind signals on a nightly basis so that you just blindly take them. They're for educational purposes so that you know what to look for when you're trading on your own. As we see here, just a few weeks ago, on the 29th of June, we had a strategy number 4 buy signal in letter K, Kellogg. Okay, this was generated, and we sent an email alert on the night of the 29th to all of our members. Now, once again, these are only for educational purposes so that you know what to look for, what a proper strategy number 4 buy signal looks like. Okay, because there's still a few rules I didn't go into today that you have to look for. After a few practices and after maybe a few weeks or even months, you'll be able to spot them on your own. But while you're learning, we send out these email alerts, and if we look at letter K here, we see here that we're above the 50-period moving average. The buy signal was generated on the 29th, okay? So that's good, but not enough consistency. For our sake, we still like to confirm it, so we add the PET D. And we can see here that nearly all the bars have been colored green, except for the bar prior to it. So now we have the confidence to take that trade. And look what happened the next day. The stock went up 5 points in 1 day. Obviously some news or something it was related to, but we didn't know that. We took all our cue from the chart in front of us, and we email alerts to all of our students and members in the course. So this is what you're going to be getting as part of the course, and trust me, a year from today, you will have wished you became a member of these courses, okay? This is our Dynamic Duo package. We have students continuously giving us testimonials saying, boy, I wish I had known this sooner. I wouldn't have wasted $5,000, even $10,000 on some course or some membership of something that never made me any money or was never consistent at all. So here's what we're offering you. Once again, the 2-for-1 attendee special. Instant course access, detailed videos, okay? We give you all the entries, all the exits, all the stops. You can choose from all of those different variables to make your own decisions. We provide you with signal alerts for a limited time. You have 4 PET-D trading techniques as well, different ways to apply the PET-D. This includes both the add-ons, and you also get lifetime correspondence. Once you become a member of this package, you are a student of mine for life. You can always correspond with me and ask me any questions you like. Now, Pro Trader Strategies, which is my sister site, they handle all of my marketing and promoting of our courses. They have this listed on their site close to roughly about $3,000 or $4,000. What we're doing is dropping the price now down to a one-time fee of $14.95 plus a $97 per month fee. Okay, and this is for a limited time only. Now, if you'd like to get instant access and lifetime access for both courses, we're dropping the price even more, down to $24.95. This is down roughly another $600 or $700 from the actual prices of these courses. So there's lots of ways to take advantage of this. We're offering also a payment plan, so you can contact Pro Trader Strategies and structure some type of payment plan so that you can be up and running with instant course access. Remember, if you purchase these separately, it would be over $3,000, close to $4,000. We're offering you this for a one-time fee of $14.95 and only $97 per month. If you'd like to take advantage of the lifetime access to both courses, it's a one-time fee of $24.95, okay? And we have payment plans, but for a limited time only. So here's how to take advantage of these great courses, and we're having this great discount for a short while. Contact Pro Trader Strategies, my sister site. As you see there, that is their email address. If you'd like to set up a payment plan with them, call them directly at 310-598-6677. Now, there is the link at the very bottom there, but it's not a live link. I believe if you look at the chat box on the far right of your GoToWebinar column, they have posted a 30% offer off using the link there, and that is live. So we have our 30% offer that is off today. All you have to do is simply click on that link in the chat box, and it will automatically take you to that offer. Now, once again, if you'd like to set up a payment plan, contact Pro Trader Strategies. You can talk with them and discuss them, and you can put down for a small deposit. You can be up and running with instant course access, and I can be your instructor in these two courses, okay? So I'm going to leave this information up while I open up the question and answer box, and thank you for holding off on any questions, and we have the last 10 or 15 minutes to take all of your questions. Okay, first one is there any target decided by this technique? Yes, there is, Amit. We have numerous targets. We have aggressive targets as well as very conservative targets. We also have targets for you staying in the trade as long as possible, but these are all within the course. And these were the remaining rules I can't share because it wouldn't be fair to the people that spent good money purchasing these courses. So yes, we do have all that information provided for you, but it's within the course. Another question. Hi, Steven. What are the guidelines for setting the targets, target 1, target 2, and how to set the initial stop and how to trail stops? Thanks. Well, I think I just answered that. Once again, that's all in the course, David. We just, what we gave you here was probably about 3 of the rules of that particular strategy. We just couldn't discuss stop techniques or exiting techniques because it wouldn't be fair to the people, once again, that have paid good money for these courses. As you can see, they're roughly close to $4,000. We're dropping the price down substantially, that great discounted price for one-time fee of $14.95, I believe, plus $97 per month. So we just can't give everything away. That would be giving away far too much, okay? Remember, if you have any questions concerning setting up a payment plan or getting that discount, you're unable to do it, you go to the link, all you have to do is contact Pro Trader Strategies and they'll set it up for you free of charge. It'll all be set up. And remember, these techniques work great on a number of platforms. People are always asking which platforms you can apply them to. Let me give you just a short list here of the platforms you can use it really quickly with. You can use it on TradeStation, Metastock, MT4, NinjaTrader, FCXM, also on Sierra Charts, and even Thinkorswim. We just have a few alterations that have to be on Thinkorswim. You can't use it on the actual Thinkorswim program, but what we can do is just take their data and then apply it to a free NinjaTrader platform, which we set up for you. So it's all very simple. Our tech support sets it all up for you, and you can be getting the signals as well as the coloring of the bars on a NinjaTrader free platform that doesn't cost anything extra, okay? Nick asks, hi Nick, he says, do you use a trailing stop or is this just for a quick profit? That's a good question, Nick, but once again, it's up to you. Because remember, I stated it goes against our philosophy to tell you how to trade. This is the way most traders trade. They will go to a chat room and the guy will say, this is the time frame to trade on. This is where you buy it. This is where you sell it. This is where you place your stop. All right. And basically, what have you done? You've taken yourself out of the game. You've allowed someone to trade for you. We don't believe that. In fact, what we believe is that that's the reason why upwards of 80% of all traders fail, is because you're taking yourself out of the game and you're letting someone else trade for you. You should never let anyone tell you what to buy or what to sell or how to trade. That's why we provide these signals for you as purely as educational means only. They're only for you to learn what to spot on your own. All right. And once you know what to look for, then you're able to do it on your own. So therefore, we don't tell you where to get out. We don't tell you where to place your stop. We don't tell you if you should trail it. We give you all these different options and variables and then let you decide. And that's what my nearly 40 years of mentoring comes into play. I work with you, any correspondence we have, I share all these ideas and we show you in the courses, and then you can decide, well, you know what? I like to get in and out rather quickly. That's the best way I like to trade. I don't like to hang around a lot, so I'll use the very short-term exit. Great. Is that better than using the longer-term one? No, it's just that's what meets your needs. Now, other traders like to stay in as long as possible, so we show them ways in which to try to squeeze as much bang for your buck. But there is no right or wrong way to trade. The only wrong way to trade is when you listen to someone tell you what to buy or sell, and when you listen to someone tell you where to exit and where to place your stop. Those, in my opinion, are really recipes for disaster. Trust me, I know, because when I first started trading, that's what I did, and I couldn't make a dime. I went for nearly 2 years of not being able to make any money because I was relying on other sources to tell me what to do. I was lucky enough to have my mentors take me and pull me aside and say, Steve, quit listening to this outside noise and learn to listen to the most important thing, which is the chart in front of you. That's the market you're trading. So whether it's futures, whether it's stocks, whether it's currency pairs, only look at the chart, and once you learn what to listen for, once you learn what to look for, it's a lot easier, it's a lot cheaper, and you're going to get on that road to consistency much quicker as far as we're concerned. Okay, that's our opinion. Okay, great questions. Any more? Remember that, as you see here in front of you, is the information. If you really want to take advantage of this discounted offer, go to the link right there at the bottom, or as you can see in the chat box on your far right. Or if you're interested and you just want to get some more information about pricing or platforms or payment plans, just email, or probably best to contact Pro Trader Strategies would be to call them. One of their trading consultants would be happy just to give you some more information, and you can decide for yourself what you'd like to do. But if you want to take advantage of that payment plan and this discount, I would suggest in the next day or two, because this is not going to last long. Okay? All right, as we close here, I want to thank you all so much for attending today. I really hope you take advantage of what we offered. I hope I can help you in some way and giving you some information to increase your odds for success. And I look forward to all of you becoming students of mine at Specialist Trading in the Dynamic Duo courses. Thank you so much. I shall see you next time. Bye-bye.